Let's bring in Meritas Advisors partner Lenore Hawkins. All right, Lenore, just want to ask you right off the bat, should people be panicking right now?
Well, let's put it in context. It's down, yes, 30%, but it's still up about 70% for the year. But China, being an emerging market, obviously this should never account for more than a small portion of somebody's portfolio. But if you look at the really long-term perspective, China's going to be really interesting in that at some point it's going to be a bigger part of the emerging market indices. And we could estimate around maybe a quadrupling of the demand for Chinese stocks if they do actually get involved in those indices.
So here's the thing, and I've made some of these points that you're making, Lenore, in terms of the numbers. EMAC's made some amazing points. But American investors understand that these things start a certain way and it continues. If China's market continues to break down a little bit here and they start to give up even more chunks of these gains as rapidly as they are, one word we're hearing a lot this week, emergency. Emergency measures in China, emergency measures in Greece. That word scares the heck out of people when you start talking about markets and economies.
And with China, it's very difficult to know just exactly what's going on there because whatever information we do get, we know is not exactly accurate.
So then you're okay. You're all sanguine with this. You're whistling past the graveyard. Everything's hunky-dory. You're okay with everything.
Oh, no, I'm biding my time, but I think it's going to be a very good buying opportunity.
Go ahead, Adam.
Well, isn't the danger here? I mean, you and I really can't buy stock in China, so that's off the table right now. The problem is Hong Kong. You get a contagion. Hang Seng closed down 6%, and that's where we do buy stock as proxy to China. That's the danger, is it not?
Oh, definitely. But pay attention, take your time. This is going to be a good, at some point, it's going to be included into these indices. And right now, it is the most underrepresented of, I think, basically any index in the world. Hardly anybody owns China,
right.
And yet it's becoming one of the largest economies
to
in the
your
world.
point, they just had the MSCI, and they were going to include them. They made their pitch. They were turned down, but they were also sort of given a wink and a nod that next time around, we'll have some of your stocks in there. So go ahead.
Yeah, in October, we've got the vote on whether or not China is going to be included into the strategic drawing rights packet.
I think they will be, though. I really think they will be. And let's not forget, though, the BRICS have their own rescue package. They're building a brand new Silk Road. There are a lot of reasons, I guess, Adam, that China wants to keep this up. But does that equate to a greater risk for everyone outside
Again, I'm
of China?
going to quote EMAC. The Chinese government wants to keep it up to keep stability in China and their people placated. I'm going to quote Obi-Wan Kenobi. You will never find a greater hive of scum and villainy. I mean, those stock markets are not transparent. Be cautious, as Obi-Wan.
Okay, they're trying to move away from an export-driven economy.
Lenore, let the force be with you, but we do appreciate a calm voice coming on, especially one as accomplished as you. Thanks a lot. We'll talk to you again soon.
Thanks, Charles.
All right. Hey.